these big traditional long setups. The VIX's rally here has completed its profit targets. And what we're watching for here is the next leg of a VIX volatility rally, but not before we make a pullback. And you can see here, as we completed the profit target from last week, that setup's done. We ran into old resistance levels here and are slowly pulling back down into a support level from last week Wednesday's lows to highs. Now you're going to see this inverse setup inside of the dollar as well too, as we're going into our morning. There's a Wednesday's lows to highs. So what does this create? The dollar pulling back into its Wednesday's lows to highs creates a rally on the indices into last week Wednesday's highs to lows. We have bank squeezing back up into our 50% shorts from our highs of the week last week to lows. And then we have the VIX, which we just talked about here, pulling back off of its resistance / previous highs of a daily resistance level back into last week Thursday's lows to highs. Now, what's really important to acknowledge here is that the VIX hasn't broken its longer term resistance levels. The indices haven't broken their longer term support. So we're in this moment here where we have a short-term intraday VIX short and indice long, which leads us to resistance levels above us on the indices, into support levels below us on the VIX. And then the next question is, at this point, is does the next leg of this VIX volatility rally develop here? And what we're watching very closely for is that the new VIX J26, it's the April contract, the new April contract, this is a brand new opportunity to join a volatility uptrend. You know, there's many legs to an indice sell-off or VIX volatility rally. And we've just seen the very first part of it, potentially, going into the end of last week. The next leg of this VIX volatility rally will be decided here as we're completing these profit targets to these VIX volatility highs to lows and running into last week's lows to highs on the VIX in its new April contract. This week is rollover out of the March contract and into the April contract. And if we look at the, let's refresh this here and see if the new contract, where it is in volume here. And it is, we still have March at 46,000 and the April is already at 30,000. So you can see there that that is an incredible volume pickup in that new contract. So while the VIX is falling back down into its support levels, the indices potentially rally from their overnight lows to highs and into our larger resistance levels. So you can see those VIX shorts from highs or correlating with an indice long from lows here as we're going into our morning. Now, this is a pro gap down and go situation, and there is only a 50% probability for the day of the week. What does that mean from the perspective of our gap fill statistics? Well, there's only a 50% probability, 56% probability for the day of the week, but we are well outside of the 30 handle, which there is only a 33% probability of filling the gap. In fact, it's probably much lower than that, given that This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.